Hello and welcome. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we're tracking at this hour. Weak Wednesday on Dalal Street with both benchmark indices trading in the red. The PSU banks weigh heavy. IT players extend support. The cabinet allows 100% FDI in single brand retail via the automatic route, and retail stocks spike in trade. The government also paves the way for foreign investment into Air India, allows 49% FDI under the approval route in the debt-laden carrier. And 5 strategic investors are likely to submit final resolution plan for debt-ridden Bhushan Steel.
Well, let's look at how markets are doing, kind of holding on at around 10,600 for Nifty, I would say, although there is enough pressure, at the higher levels, and we have seen markets correcting, both Sensex and Nifty, and more specifically it was Nifty Bank that looked really weak. It slipped below 25,600, has recovered lost ground to some extent. Almost, I would say, 1/3 of the losses have been recouped so far on Nifty Bank as well. It's the PSU bank space which has really been putting a lot of pressure, but also some of the private names were not doing well in today's trade. If you look at the overall picture as far as Nifty is concerned, it's clear that almost 2/3 of Nifty constituents are right now in red. If you see what is really supporting or helping markets still is IT. First of all, TCS, Wipro and HCL. Interestingly, Infosys is somewhere in the second row, while we thought that would probably be the key gainer looking at the news flows, but that didn't really happen. On the other side, we have a lot of pressure coming in from auto stocks, so names like Iyer that you have, and also some pressure. Actually, the most interesting space is probably the oil marketing companies, where you have HPCL up there and IOC is down in the last row. Metal segment is also not doing well because commodities have corrected quite a bit, so we also have some pressure coming in from there. But if you look at the overall picture in this market, yesterday we have seen that markets started correcting, and then mid cap and small cap participated, or rather led in a big way. Till then, probably mid cap and small cap had their own traction, but today also market breadth has remained weak almost since morning, and we have seen more losers than gainers in today's trade. So let's now look at some of those mid-cap stocks which have really been active in today's trade, and let's see which of those stocks really are. Interestingly, even today you can find a good number of gainers in this market. There are certain pockets that traders have been identifying and trading on the long side. So look at some distilleries, for example. Ever since the results came in 3 days back from one such company, we have seen a lot of action in smaller distilleries, and some distilleries is an interesting stock in today's trade. What has also moved up is crude, and therefore some beneficiaries like Dolphin Offshore, Aban Offshore, and there is one more name that I have spotted today. That is Alpha Geo, because they are also active in the oil space, kind of service providing company to the oil explorers, and therefore this stock has also moved up in today's trade. So some positives coming in from crude. TBZ is another key mover in today's trade, although gold remains range bound but quoting at higher levels. Yes, definitely 3 to 4 months high is what we have seen there. A lot of action in some of the smaller alloy and steel companies. So look at Tinplate, Tata Sponge, Tata Metallics. Is there something with the Tata Group, or is it with the commodity? We don't know yet, but there is a lot of movement. Interesting move with good volume in this space. What is not doing well? Shalby, after disappointing numbers, is down. South Indian Bank is corrected today as well. You also have some of the big movers of last few sessions. So Built is correcting, Subros is correcting in a big way as well.
All right, so there is some profit booking, Pradeep, which is clearly visible now on the screen for both broader as well as the benchmark indices. But let's also take cues from the futures and options market. If you look at what's happening in the option side today, we've seen a lot of call riding on the 10,700 strike, which is telling you the road to 10,700 may not be as easy the way it was for 10,600. But let's just pull up the Nifty futures and check the premium. Remember, the premium has been falling in the past few sessions. Okay, I guess now it's gone gone up in the last few minutes after markets corrected. Yesterday it was about 10 points. Right now the Nifty futures premium is almost 12 to 13 points. The open interest build-up is almost 4%. For Bank Nifty, which has been underperforming, but a good recovery has been seen actually. Remember, the PSU banking space was down. So currently Bank Nifty's once again crossed the mark of 25,600 and it's down only 100 points compared to 150 points fall that we had to see. But the premium is about 20 points, open interest build-up of about 3.5%. In terms of options activity, the range that one is getting is clearly between 10,500 to about 11,000 on the upside. But we've seen a 10,600 strike. That's at the money strike for both call as well as the put side. That's been pretty active. So the 10,600 call so far has added about closer to 6 lakh shares, and the put strike, the 10,600 put today, has added about 5.6 lakh shares. But the 10,700 call is the one where maximum addition so far has been seen of about over 10 lakh shares. Let's pull up the India VIX. What are the key concerns for markets as of now, at least in the near term? The VIX has been rising, so volatility continues to be on the higher side. That's over the mark of 14 right now. Even the Nifty PCR, that's the put call ratio, that's also been on the higher side. Yesterday towards the close it was about 1.67, which is telling you that probably this is the resistance level, or there could be some bit of profit booking which could come in around the higher levels. Let's look at the stock futures then. Indocount is your top F&O gainer for the day. The stock is up on very high volumes on the
what you're talking about, the index, if you could tell me how much confidence do we now have that 10,600 is a level that we can sustain? Because yesterday also we were debating this, that given the kind of build up, probably still traders are not quite confident about 10,600.
I'll not say they're not confident, Pradeep, but now actually the trading game starts. They have to decide a range till, either till the expiry or at least till the budget now. And that's the reason there's no negative news which has come in. It's only the India VIX is inching higher because now there's a big event. Remember, during Gujarat election time, India VIX has, reached those levels of 16 to 17. Then it came down. So it's an event risk now what we're talking about. But in terms of range, I guess Abhijit Phatak yesterday, like he suggested a strategy, writing both 10,600 call and put. So now also if you club the premium, it's only about 200 rupees. So that's telling you the traders will play for a range, and that's about 200 points on the upside and 200 points on the downside. So that comes up to 10,400 to about 10,800 at least till the January expiry.
So the VIX really goes up when there is a lot of option buying rather than writing relatively, and VIX comes down when there is more writing. So writers kind of show you a confidence that, okay, this is the level that we think is correct, whether we are writing straddle or strangle, but we are confident about the range. When VIX starts to move up, which means the range could be broken on either side, or that people are not very confident, or they're hedging. So like you said, maybe ahead of election, there could be a lot of portfolio hedging, or you're just playing on a big move.
Portfolio hedging is definitely there. Start of this month, we saw buying coming back from FIs in the cash segment. And look at what they're doing in the futures and options side. They've been hedging their cash portfolios. That's always been the case, at least from the institution side, be it domestic institutions or the foreign institutions. They have to hedge their cash portfolios to maintain the kind of rules they, lay down for their funds. But in terms of traders specific, they play on the near-term range, what can be the range that you can see by gauging the data. Now, if you look at the overall concentration, if you ask me the wide range for January series, it is 10,500 to about 11,000, because 11,000 call is call strike is where maximum OI concentration is, and 10,500 put is sitting with maximum open interest.
So my realistic range or upside potential for Nifty for this month technically would be 10,680.
Okay.
And if I want to be more optimistic, maybe it could go up to 750 or 770 kind of. Definitely.
What you're saying today is being reflected in the data, because the 10,700 call has seen significant writing. Look at the premium there, it's 53. So that's telling you the maximum upside that the call writers are seeing is 10,750. All right, I think we can proceed with the two stocks. Neeraj, you have to say something?
No, I just wanted to, was here listening to this conversation. Anyways, I have a fundamental problem with this whole range that we derive out of the options activity, because it's merely depiction of what traders are believing could happen, not necessarily what will eventually happen, right?
Into the market.
Yeah, or what traders believe is built into the market, and this is not the gospel truth that this is what could eventually happen as well.
There are two ways of trading the market. A, you know how big players are going to play, and therefore you could follow that. or B, you just follow the data because that will tell you where the...
And which is an important part, which is why I think the analysis of what is happening on the options becomes really crucial, and which is what Navneet does almost every single day. But having said that, guys, I just thought before we move on with the other pieces, I thought it's important to mark what IT is doing right now. It's been not 4 or 5 days in a row that we've seen technology participate in a really big way. Now, I don't know if there's some specific trading positions that Navneet has seen or some charts that you've seen, but just gauging by the move today, it's not led by the news in Infosys, because Infosys is the least performing large cap name today. It's essentially TCS. Wipro is up 2%, and the last 2 or 3 sessions that's gained quite a bit. HCL Tech, and remember the currency doesn't do this, but it just ties in. If you guys remember with a piece that we had done about a month ago, wherein we were talking about how historically the IT, the currency doing well, as fundamentally incorrect as it may sound, actually leads to the IT index doing well. The past few instances, the last 6 instances, wherein the rupees had a big move on the upside, the IT stocks have actually performed well, and this one could well turn out to be a point like that, wherein we had the currency strengthen from whichever level you want to take, 65, 64 odd, or whatever, 64 half odd, whatever to whatever it is right now. The IT stocks have really done well in the last 15 odd sessions.
Interestingly, TCS comes out with its earnings tomorrow.
Yes.
It's touched its fresh 52-week high just ahead of the earnings tomorrow. So that's good going for them. Let's see if the numbers are good or no. But as you said, the options data for Infosys, it looks like the up move can be capped to about 2,800. There's a lot of call writing which has been seen there.
Should be interesting. So both TCS and Infosys, and they come out post-market hours. So this time around on Friday, we won't be weighed in by 2 IT major numbers. We'll have time to digest what TCS has said in its commentary, and then absorb Infosys commentary over the weekend, and then react to those results on Monday. But fabulous move by TCS. I must say a really good move by Wipro for the last few sessions, because that's been that one big mover for the last few days. Not just today. If you look at this week's chart, Wipro, I think it's had a stellar run. So large cap IT clearly ruling the roost today in trade.
Okay, that's about the markets, but let's also talk about the cement space. The cement makers have taken a price hike in the month of January, with players in the west and southern region undertaking steeper hikes. In fact, Nikki Mirchandani, my colleague, joins us to give us more details as to what has led to this price hike. Nikki, over to you.
It's a seasonally strong period for cement companies starting Jan, and all India basis cement prices have gone up for second consecutive month. If you look at the number on month-on-month basis, we have seen a 5 rupees hike coming in on month-on-month basis, and around 16 rupees per bag hike coming in on year-on-year basis for the month of January. The steep hike have come in from the south and the western region. Now remember, they are your depressed regions, and we haven't seen much amount of hikes coming in from there. Surprisingly, we have seen the northern region taking a cut in their prices. This is a seasonally strong quarter. The prices, however, remain flat in both central and eastern region, and the hike come on the back of muted Q3. Price cut by northern players. If you look at that December, the bar graph that which shows here, it shows that the December 2016, the company, the region went ahead and hiked the prices by 16 rupees per bag, and again it reversed some of its rolled back the price hike and slashed the prices by as much as 12 rupee per bag on month basis. This is after there was a relief on petcoke ban by Supreme Court. In southern region, you would see it's a second consecutive month of hike. It's a minuscule price hike that we saw in December. In Jan, it's a 19 rupee per bag hike that we're looking at. The hike is mainly coming in from the region of Kerala, Tamil Nadu and Telangana, which has increased the price in the range of around 23 to 25 per bag. Usually the trend was weak given the sand shortages that we saw in the region. Western region also snapping 2 months of declining spree, inched up and went ahead and hiked their prices. It's a meaningful price hike came in from Maharashtra, though the price hike quantum could have been higher had it not been for the decline that we saw in Gujarat region. If you look at the overall trend and if you see the Q3 trend, you would realize that pricing power still remains weak. In fact, the prices have fallen on a pan-India basis, year-on-year basis, after 5 consecutive quarters of gains that we have seen. These losses or the declines that we've seen in Q3 is mainly on account of depressed pricing that we've seen in southern region.
Well, thanks, Nikki, for the update. So that's the update coming in. By the way, Navneet, I think you wanted to talk about 2 stocks when we interrupted.
Yes, I wanted to speak about Indocount. That's one of the top stock futures in today's session, not in terms of the build-up, but look at that. The stock's almost at day's high with gains of 7.2%. Remember, this is a textile player. On the future side, we've seen open interest build-up, but just want to highlight the cash activity. The stock has gone up on very high volumes in today's trade, so watch out. Maybe there is some bit of cash-based buying which is being seen here. Indocount currently trades around the level of 134. The other one is a pharma player. Glenmark is the one which is quite active. Now, interestingly, we've not seen any sort of build-up if you look at Glenmark Pharma January futures, as you can see on your screen. But look at the underlying. That's up almost 3%. The stock's up for the 4th straight session today. So it looks like there is some cash-based buying seen for Glenmark Pharma as well in today's trading session, as the stock is trading with gains of almost 3%. 619 is the current mark where it trades. So do watch out at least for the delivery data for both Indocount as well as Glenmark, because both especially Indocount, Pradeep, because I've not seen Indocount moving that substantially, at least in the recent past.
So if I remember it correctly, I think it was Monday morning when Abhijit Pathak had given a buy call on Indocount. That is just 2 days back in our morning show in First Word, when he recommended a buy on Indocount, and stock has really started moving up. Glenmark Pharma also has given a significant breakout, I would say, from a flag pattern. I wish we could immediately pull up that chart and show you, but we'll probably look at it later. So these two interesting stocks coming in, which show a combination of positive recommendations or breakouts, and also interesting build-up. Moving on to the next stock that is on our radar, Bajaj Auto wants to rediscover a more prominent position in India's domestic motorcycle market. The company today launched 2 motorcycles under the Discover brand. The Discover caters to what the company calls the executive segment, which it says accounts for 52% of the domestic motorcycle market. Alex Matthews spoke to Eric Was, president of motorcycle business at Bajaj Auto, to find out why they are betting on Discover once again. Listen in.
The change in strategy has 2 legs to it. One is a completely revised product, which is the center stage of the strategy. So all new engine. Cubic capacities have been redefined to the 110 and the 125 cc cubic capacities, which we believe is the correct cubic capacity for this part of the market and this type of customer. And the second part of the leg is in terms of as you mentioned, we've been very quiet about the Discover. We've been quiet because I think it takes time for us to figure out the right kind of solution for the market. We believe we have the right kind of solution for the market. We've tested it very carefully over the last couple of months. And we believe we have the right solution to the market, which will allow us to invest significantly behind this brand once again.
Is there a worry that customers will sort of get confused about the fact that it wasn't in the market for some time, it's coming back, maybe it's not so different from what it was?
I don't think so, Alex, for 2 reasons. One is we have been selling the Discover 125. We have not invested in marketing, but we have been selling approximately 8,000 numbers every month for the last 2.5 years. So there are customers out there, they have been buying the bike. The bike has never vanished, but it was a single product, very quiet as you mentioned. And now we are back. I think customers will like the product they see and they will buy it.
Now, with regard to the market share that you're hoping to gain, in the presentation that you made earlier, you talked about the executive segment being premium 100 to 125 cc. And you said that it's just a little over 50% of the market.
That's correct.
What are you hoping to gain with the introduction of this or these 2 bikes in the segment, and what do you want to end up with at the end of 2018, say?
Yeah. See, ideally we would target by the end of 2018, this time next year, we should be selling around 70,000 plus bikes in this segment under the Discover brand. That is our target. That would translate to a market share of approximately 15%.
Okay, let's move ahead. Motilal Oswal has come out with a note which explores possibilities in the emission control equipment manufacturing companies. Yash Upadhyaya joins us with the contours of that report. Yash, over to you.
Thanks for that, Navneet. So we had Motilal Oswal come out with a report earlier in the day highlighting the tremendous opportunity for the manufacturers of emission control equipments in India. Just a small background before we go into the details. The government, through the Ministry of Environment and Forest, had directed the power plants across the country to adhere to the new emission norms within a period of 2 years back in December of 2015, but due to very little to no progress seen in that time frame, the government increased the timeline by another 5 years to December 2022, with the Pollution Control Board issuing notices to as many as 131 gigawatts of power plants across the country to comply with the emission norms within that time frame. Now, they are of the view that because of this, there is a huge opportunity of as much as 1.3 lakh crore of capex coming in from these power utilities to upgrade their emission equipments. India's existing power capacity stands at about 166 gigawatts, with additional 30 gigawatts to be commissioned by FY22 as per the 13th 5-year plan. Together, the state and the central government holds as much as 60%, almost 100 gigawatts of the current capacity. And a bulk of these orders are likely to be placed by FY21, so that the construction is completed within a period of 2 to 2.5 years, as the entire timeline has been fixed at December 2022. And also an annual order opportunity of as much as 40,000 crores is expected to come in for prominent players like BHEL, L&T, Thermax, GE Power, Reliance Infra, among the big names that we are looking at. Also, there is seen a huge opportunity in the demand for boiler turbine generators to be replaced or phased out in a planned manner. Motilal Oswal is of the view that this too would be done in a way which would help these emission control equipment manufacturers to generate much more revenue, with the Ministry of Power being of the view that plants older than 25 years would have to be replaced with newer supercritical units that are less polluting, are more efficient in terms of coal consumption, and have lower fixed costs. They also believe that in a scenario where all the existing plants which are older than 25 years were to be phased out, then as much as 48 gigawatts of its thermal power plant capacities would have to be phased out, which would mean significant revenues coming in for these equipment manufacturers. Back to you.
Well, thanks, Yash, for the update. And Cabinet today approved FDI limit in single brand retail to 100% via this automatic route. We managed to speak to Executive Director at Monte Carlo, Sandeep Jain, on the impact that this move is likely to have. Listen in to what he had to say.
See, I think if we look at the branded segment, already most of the brands have opened their shop in India. If we talk about Zara, Benetton, I would say that Nautica, Gang, all are here. The only difference is that earlier they were have to go through a approval route where they could have some franchise or licensing arrangement, and now they don't need all these things. They can directly come and open our shop. So for us, I don't think there is going to make any difference because the brands are already present. The only difference is now they can own their shops. Earlier they were having a partnership with local brands or local people. I don't think there is a much fresh investment going to come in India because of this, because already brands have come to India before that also. So whoever wanted to come to India have come through approval route also. It's not that now the automatic route has opened, they will come because of that. There may be 2-3 brands which may come again up in India, but I don't think the major brands will come up in India. They've already come in the past.
Okay, so that's the industry view coming in from Sandeep Jain of Monte Carlo. On that news, that Cabinet today approved 100% FDI in single brand retail via the automatic route. And we did see some reaction in terms of stock price coming about. If you could just pull up stocks like Canterbury Retail. In fact, Monte Carlo too surged post this news came about. So that's right now trading with gains of 5%. But you had stocks like Zodiac Clothing as well as Indian Terrain, which saw substantial move post this news. Canterbury Retail now trading with gains of almost 5%, but Zodiac seems to have come off days higher. Remember, this had a gap up opening because there was an expectation in the market that today the Cabinet will approve that, and Indian Terrain is sitting with gains of almost 4.5%. But that's about the retail space. Let's talk about the stock where we're going to put our spotlight on, and that's Havells. The stock has now fallen for the third straight day today, and Pradeep's chart shows that it's showing signs of topping out. Pradeep, what are the key highlights of the chart today?
So what is interesting is, in market right now, we see several mid-cap stocks are coming under profit booking, especially those who had run up quite a bit, and Havells would qualify in that category. If you look at it, the stock started moving up sometime in early December from around 500 odd levels and went almost to around 570. That is on the higher side. But look at what is happening over last 3 sessions. You can see, first of all, the day when we hit that new swing high, that was last Friday. If you look at this candle, it tells you that there was significant selling pressure at higher levels. And the last 3 days clearly show, the selling pressure continues, and there is a lot of selling in this stock, not only in the cash market, but also if you look at what is happening in futures and options space, you could see significant build-up in futures where a lot of short positions are being built, and also there is significant call writing at higher levels. So that is that are some other triggers for choosing Havels today. But if you look at the technical pattern that we are talking about on the higher level, you could clearly see the stock has given a breakdown below this trend line or a upward sloping channel that you could see on your screen. Today, for most part of the day, it has stayed below that level. So that kind of signals a top for this stock. Although at around 545, you'll see a swing low, which is probably serving as a support as of today, but it may not hold given the other indications. What are those other indications? I talked about options and futures, but look at what is happening to these technical oscillators. So while price is still kind of trying to find some support, although there is significant pressure, but oscillators have already taken a lead. Whether you look at RSI or MACD, it's very clear that stock has kind of topped out, or at least the oscillator has topped out and is giving you a warning. So that is what the chart is telling us today on Havels India. It's time to book profit or even go short if you want to. That is the signal coming from this chart.
And of course, we'll ask experts about the possibilities of the same as well a bit later on. But interesting one on Havels for sure. If I can, I just want to bring up the chart of Som Distilleries, the intraday of Som Distilleries and Breweries. That stock has moved up 20%. I'm told there are some block deals that happened after which the stock went up, and which is why the volumes here. But I think viewers would remember we were talking about almost all the brewery stroke distillery stocks on 2 occasions in the last 15 days. One when GM Breweries number came out, and 2 when we were doing this whole discussion about how molasses costs have come off, and that would impact the distillery companies much more than any others.
Can we just, sorry Neeraj to interrupt, can we just pull up Pioneer Distilleries and MP Distilleries? I think they're the direct competitors, and we've seen a rub-off effect. All these stocks are up. Pioneer has also gone up 7%, and MP is also trading around its 52-week high.
And interestingly, the patterns look similar. So MP Distilleries should also come up on your screens about the same time, at least, that Pioneer has moved up. Yeah, about the same time that MP has moved up too, and Som Distillery is up about 20-odd%. Now again,
so what is the common thread? The raw material becomes cheaper.
That would be one. I don't know if the common thread is that the same set of buyers suddenly turn bullish on the distillery companies together. Fundamentally, you would, molasses costs having dropped down so much. I don't have the exact number right now with me. I'll search my email and get it. But I think molasses as a raw material cost had dropped off northwards of 50%, if I'm not wrong, from what it used to be. And that's a big booster to all of these companies. And I remember having this conversation because when I was talking about it, Navneet at that point of time also had mentioned about this point of how the highway ban, which was a big problem or impediment, has also kind of moved away. So there is scope for volume growth. There is scope for margin expansion. Both of these moving together, even if price rise does not happen, there is a natural tailwind to both revenues as well as EBITDA, and thereby on the bottom line. And we saw examples of this in GM Breweries numbers, right? I mean, it was just an exaggerated jump. I think 1,300 basis points margin expansion. That's just quite strong. But it was seen in the numbers of GM Breweries. If others can do that, if a Radico and United Spirits in whichever little way can do that, it's great for them. Maybe some of the smaller ones can do it better because their leverage or exposure, sensitivity to any kind of raw material change would be much higher because of a lower base or higher concentration.
Also the liquor stocks have moved. So maybe now this is the other play in the same sector. We've not seen so much of a movement for distilleries, which we're seeing today. So for sure, Radico, Khaitan and United Spirits could be trading around their, 1-year high levels or so. But distilleries had not moved so much. Two of them are trading at their fresh 52-week high. Maybe just a catch-up play in the same sector now.
Yeah, and there was a report that I read for SOM in particular. I think an ex-United Spirits or an ex-Radico, Khaitan, very senior level employees now in charge of their operations. So they are obviously getting an organizational structure into play as well. Last but not the least, it's a tiny tune. I don't know if you guys remember or no, but BCL Limited. I was talking about on the 1st of January.
Nilesh, I'm sorry to interrupt you.
Sorry.
I think we need to cut to something. I think volatility, that's the theme that we're talking about here, and it's set to return in 2018. That's the word, in fact, coming in from Nilesh of Kotak Mutual Fund. Listen into what he had to speak to our colleagues earlier.
We have seen that when markets are less volatile for a period of time, invariably it gets into complacency. And today, anecdotally, there are many people who are investing in equities assuming that equity is safe and fixed income is risky. Now, when that kind of complacency sets in, even smaller events could create volatility. Equity by nature is risky, and by nature it is volatile. If it didn't get for about a year, it doesn't mean that it won't repeat in the future. My expectation is that calendar year 2018 volatility will be higher than calendar year 2017.
Now, last year we saw that domestic money was the predominant factor for driving the equity markets upward, while the FIIs were sitting on the sideline. Do you expect that phenomenon to continue or change in 2018?
For first 25 years of my working career, I always used to pray to the God that today let FIIs be a buyer that will push equity prices up and my investors will make money. Last 2 years, I have been praying to the God that let FI be a seller so that I will be able to buy stock at a reasonable price and make money for my investors. I think from a flow point of view, today domestic liquidity is bigger than FII liquidity. But from a size point of view, FIIs are bigger than domestic institutional investors. At the end of the day, stock market doesn't differentiate between DII versus FII. Our objectives are the same. We want to make money for our investors.
Let's shift focus from equities to commodities and specifically oil. Today morning we saw that Brent was almost at $70 per barrel. How do you see this impacting Indian markets?
So one, higher oil prices are negative for India. It results into widening of current account deficit. It has adverse impact on inflation as price rise is transferred to the consumers. It also results into higher fiscal slippage for the government. So clearly, oil prices, if they remain at elevated levels, is negative for India. Today, a larger portion of oil price is driven by the disruptions getting caused in Saudi Arabia and Iran. So it's more of a political tension than the demand-supply mismatch. There is a spare capacity which OPEC and non-OPEC producers are controlling, and hence oil prices look well balanced in terms of demand and supply. So limited point, if oil prices remain elevated for a longer period of time, that will be better for India. If they go up and then come down in a short period of time, we can manage it.
One final question, what are you expecting from the finance minister on 1st of Feb, and one key sector that you'll be watching out for?
So we do expect finance minister to honor path of fiscal prudence. He has brought down fiscal deficit from 4.5% to 3.2%. There is likely that there will be slippage in this financial year, but the glide path of financial discipline should continue and fiscal prudence should be honored. From an equity market point of view, we don't want any tinkering with long-term capital gain. There are rumors about it, and certainly that will not be well received by the market. But most importantly, from a sectoral point of view, we think government will focus on executing projects in infrastructure side, in rural India, in agriculture. And that sector of agriculture, rural and infrastructure should continue to outperform in the run-up to the election.
Okay, and the markets are still holding about that level of 10,600. In fact, Nifty is off day's low, so to say 10,623. Bank Nifty is also seen a bit of recovery. 25,604 is the level where Bank Nifty is trading. Good time to get in our experts to get their view on the markets and what sort of strategies are they deploying in a market like this. Joining us on the show is Kunal Saraogi of Equityrush and Hadrien Mendonca of IIFL. Good afternoon to both of you, and thanks a lot for joining us today. Hadrien, let me come to you. Nifty has been consolidating in the last 2 to 3 sessions. If I were to ask you, one were to take a compulsive trading bet on Nifty or Bank Nifty, which one would you choose?
Yeah, it has to be a long Nifty, definitely. We've actually recently come out with an overall report on the markets and the Nifty. And we are extremely bullish on the markets now. There are multiple breakouts are happening at the same time, and we don't only think that Nifty is all set to rise by a few hundred points, but we are seeing Nifty heading a lot more higher from here on. It will take another 8 to 9 months without a doubt, but these multiple breakouts, that is the flag pattern breakout that has already happened on the weekly charts in the previous week. Secondly, if you see the November and December month, Nifty has done nothing. In fact, it is consolidated. These are very, very strong signs that after a strong rally, we have seen good consolidation of 2 months. And for the first time, in the past 2 days, we have seen Nifty breaking above that consolidation phase. So prices are actually telling us that, markets are all set to move higher. We will see bouts of profit booking. We will see bouts of, selling pressure coming in selective sectors. But I really, really believe that in the next 12 months, we'll definitely see Nifty heading towards our potential target that we see according to our calculations and also the Fibonacci extensions. They're coming to 11,950. So close to 12,000 by December end. So we're really bullish on the markets, and every opportunity should be every decline should be an opportunity to, buy the Nifty or even the Bank Nifty.
Okay, Hadrien, what are the individual stocks that you will trade today?
Yeah, for today, we are bullish on, again, IT. It's been the flavor of, multiple weeks now, and Wipro is my top bet. The stock has actually given a clear breakout on the 60-minute hourly chart pattern. And I think this consolidation breakout is actually indicating we may see Wipro moving towards the potential target of 338 and keep a stop loss of close to 315. Secondly, we are bullish on Hindustan Petroleum. The stock has created a triple bottom, and this long-run consolidation phase is, slightly coming to an end. Because this is the first week we have seen HPCL crossing past its previous month's previous week's high. So these are clear indication, and early reversal signs are visible. So I'll go long on Hindustan Petroleum for a target of 440 in the near term and keep a stop loss at 417.
Kunal, what about you? What are your top trading strategies and a view on index?
Well, I think if you talk about strategies first, I think I like IndoCount. I think the stock has broken out afresh on the charts and after a very substantial consolidation. So IndoCount can be bought at the current levels with a stop loss at 131. I'm looking for a target of 139, 140 on this one. Wipro is another stock which has seen a very clear breakout. We've seen a rally across the board in almost all IT counters as we speak. And I think Wipro should very easily get to about 335, 338 levels. One can buy at the current levels with a stop loss at 316. And my final stock call for the day will be a sell on Muthoot Finance, which I think is broken down on the charts. Can be sold for a target of 450 and with a stop loss at 468.
Okay, so these are the trading ideas for the day coming from our experts. Nitasha Shankar, Senior Vice President and Head of Research at Securities, is also joining us now on the show. Natasha, for last 2 sessions, yesterday and today, we have seen some profit booking in select mid-cap names and also some of the heavyweights. Right now, if you look at the Nifty composition, 2/3 of the Nifty components are actually down. Do you see some pressure? Do you think it's time to book profit?
Not really. I think what needs to be remembered at this point of time is that fundamentals are playing a key role. So whenever there is an opportunity to book profits, investors have been doing it. but that's largely related to valuations, and if the fundamentals do not justify it, then of course booking profits makes more sense and switching to a better stock. But if the fundamentals continue to remain strong, valuations continue to remain attractive, then it's better to remain invested, because we do think that the markets are in a secular uptrend over the long term.
Some stocks in maybe the chemical space, or graphite electrode companies, or say carbon black companies that had gone up quite a bit are coming under pressure now. If you have had an opportunity to look at the valuation of these segments, do you have a view?
So I think, yeah, we were positive on these stocks, or some of these stocks for a while, but the way they have already run up, we think that if you're looking at the near to medium term growth outlook, that seems to be already factored in at current valuations. We've already suggested to our clients that they should look at booking profits at current levels, and till such time as they correct a bit, we would prefer to remain neutral. Probably buy them at a dip of about 15-20% maybe, depending upon which stock you're looking at.
Nitasha, what are you telling your clients to do with the technology? There is a fair bit of buoyancy ahead of the earnings season.
So we do think, as far as the technology shares are concerned, like we've spoken earlier also, one needs to be very stock specific. Some of the stocks, some of the companies, we do think that they will be able to withstand the structural changes that the entire industry is going through. Probably mid-cap names would look slightly better than the larger cap ones. Having said that, it has to be, one has to remember that, because of these structural changes, the entire sector could remain under pressure. So it would take anywhere between 3 to 6 months before things start looking rosy again, and the picture starts improving. So with that kind of mindset, maybe any dip in the sector could be used to accumulate some of the stocks over there. But yeah, we're neutral on the broader sector, but yes, positive on some of the stock names, especially on the mid-cap side.
About NIT Tech, and we've also seen good moves for stocks like Tata Elxsi in the recent past. Anything from these two stocks that you like? No, not really. We're neutral on both of them.
By the way, look at Coffee Day, Pradeep. We were talking about this, yesterday or day before, when it breached the listing price. Now it's breached the issue price as well, and 358 after a really long slumber. Coffee Day is making its move 2 days in a row now. Big moves there, and on fairly decent volumes too, I might add. 4 million shares traded in today's session as well. So good going there. The other one that stands out really, Navneet was speaking about it, Indocount. And then some of the Tata Group companies, Tata Sponge Iron, Tata Investment, etc., moving up in the session as well. Nitasha, what about some of these stocks which have been in a slumber for a long time and are starting to move up? And I don't know on what all you have coverage or no, but so Coffee Day is one such example, which after a really long time has had us move out of a slumber. Cable Kiran Clothing was one such example again, after a long time started moving up, and maybe that also has some reason to cheer if indeed they would think of anything regards to do with retail now that 100% FDI in single brand is allowed by the automatic route.
So yeah, some of the stocks seem to have started moving up now, and again, something that one needs to remember is, go back to the fundamentals. If the fundamentals are good and the valuations are attractive, you can just hold on to it till such time as the value gets realized, because at least theoretically, market prices do start catching up to the intrinsic value. But having said that, an investor really needs to be careful and not get stuck in a value trap, because although the numbers might seem attractive, they could be something that the markets are reading into, which is not really possible for any individual investor. So as far as Coffee Day is concerned, yes, that's been a company which we've been positive on for a while. In fact, it needs to be looked at more as a holding company rather than just as an individual consumption company. It has diversified interests within consumption, within IT, within real estate. So there's quite a bit which is going on in that portfolio. And if you're looking at the financials, they're quite strong as well. So yeah, I think probably on a valuations basis, it remained in a slumber. It remained at attractive valuations, and now we think that slowly but gradually the market price should start catching up with it. So we're quite positive on that one at least.
There is sudden bounce in Balaji Telefilms of around 5%. Stock is up 7.5% to 8% now, but almost 4 to 5% move has come in, just last 5 minutes of trade or so. Look at what kind of volume do we have here now. Almost 9 lakh shares traded so far at this counter. Nitasha, do you track Balaji?
No, not trading. I'm sorry.
Kunal, do you have a technical view on Balaji Telefilms?
Sure, I do, Pradeep. I think the stock has been in an extended kind of a consolidation, and today we are seeing a breakout. Now, you must wait for the stock to clear 175 before you go out and buy the stock. So, I'd of course now put the stock on my radar, but I'd really wait for the stock to breach 175 before it merits a buy. The reason for that is 175 has proven to be a stiff resistance in the past. So one should, I think, wait for Balaji to break past this level before a buy can be made here.
What has also gone up is Asahi Songwon Colors. I know we don't talk about this counter much, but it's up almost 12%, and I guess the moves have come in just last 5 to 10 minutes. Yes, it's trading at day's high, also hitting its fresh 52-week high. The counter has gone up on good amount of volume. So the other one is Container Corp. If you could just pull up that counter, that too has touched, I guess, its fresh 52-week high in today's session. Some bit of fresh longs have been seen here as well. The counter is trading almost at day's high now with 4% gains. Hadrien, on the charts at 1432, would you initiate a position on the long side?
Oh yes, definitely. If you see the larger time frame charts, which I just did a quick check on, if you see the monthly charts, it is actually indicating a very, very huge breakout. And 1432 is, I think, just the beginning of, a larger move that is waiting to happen on a Container Corp. So I think definitely, anyone who has a perspective of 3 to 6 months on a Container Corp should definitely, be a buyer in this stock. Monthly breakouts don't come that easy, but when they come, as I spoke to you all in the previous show, there definitely there is a reason that why those things are happening. You see the volumes are also increasing, and I think Container Corp is all set to move beyond the 1500, 1550 mark in the near term. So a definite buy.
Interesting. Okay, I know a space where Nitasha has coverage, and Nitasha, I remember about a couple of months ago when you had come to the studios, you had spoken about the consumer goods, consumer durable space, and I believe at that point of time Symphony was amongst your top recommendations. Since then, we've seen the stock do well, and how is it now defying rules of proper valuation? It's a quality company, great stock, but just too overvalued? Or you would be comfortable telling your clients to go out and invest even now?
So I think there are two ways to look at a very good fundamentals company. One is to go by the theoretical and the strict approach of value investing. That is that unless and until it is available at a deep discount in terms of value, you would not really go ahead and buy it. The second way to look at it is that you acquire a fundamentally good company and buy it at any value whatsoever, because you know that the long-term picture is so attractive that probably even a high valuation could be justified. Now, in the first bracket, of course, if you're looking at it from the first bracket perspective, Symphony would not fall in it. But we believe that it's the second thing that we should be looking at as far as stocks like Symphony or even Nestle are concerned, because the fundamentals are attractive, returns on equity are only improving. The companies, both of them, have been able to make a mark for themselves within the separate category in which they operate, and Symphony in particular is actually creating a market for industrial coolers, which is something, that potential is going to be exponential given the fact that it is yet to be explored. So that is going to be a huge driver for them. And in addition to this, their acquisitions both in Mexico as well as China, that's going to give them that incremental benefit as well. So probably if you're looking at that kind of a long-term picture for them, even the current valuations are justified, and we continue to remain positive on it.
Plans to buy afresh at 1900?
Yeah, probably buy it on dips, not buy it at the all-time high. But
Yeah, no, I mean, you could well
as long
become-
as you see a dip coming in the market, it's a good time to opportune it.
No, you could well be comfortable telling them to buy
Yeah,
it.
I mean, if it's a good stock, then why not go ahead and buy it?
Sure, okay, cool. Well, that's on Symphony, though, not
So
moving
I think
to-
valuation is probably the only risk on it.
But as you said, probably growth would justify it. But you know, the key development that happened today in single brand retail, we have several stocks moving up after that announcement came in, like Indian Terrain, for example. Do you think any of these listed companies in India really benefit by this announcement, or this is just you know, some feel good for the entire retail sector?
Sorry, Pradeep, I didn't get the question.
It was about the single brand retail announcement that came in. FDI is now allowed up to 100% in through automatic route. And after that, several listed companies in this space like Indian Terrain I mentioned, and also even companies like V-Mart that is actually in the multi-brand retail, all of them have moved up. So do you really see any of the Indian entities benefiting by this announcement, or this is just a sentimental impact?
I think it's largely sentimental. As far as the news is concerned, although definitely does provide some kind of a positive outlook for the sector. Although we're positive on the entire sector as such, because we're seeing a lot of benefit coming in from the GST side, as well as an increased propensity to consume, which is what we think would drive the traction in these both for single brand retail as well as for multi-brand retail. But as far as today's news is concerned, yes, we do think that it's largely just going ahead to improve the positive sentiment and not really contributing anything much as far as the numbers are concerned.
Okay, that's about the retail space, but there are a lot of these mid-cap size private as well as public sector banks which are there in the futures and options space as well, are seeing shorting coming about. So look at stocks like IDFC, Bank of India, South Indian Bank, Muthoot Financial was one of the trading pick from our experts today, Canara, DCB, even Chola Mandalam have seen cuts. So the cuts have been in the range of 2.5% to almost 4%. And look at that, they're almost trading at days low. DCB down about 2.5%. Kunal, any trading opportunity here in any of the stocks that I just mentioned?
I of course think that Muthoot can be sold short. It's got a head and shoulders on its daily charts. So definitely it seems like it's headed lower. Syndicate Bank is another stock that has been weak through the day. And I think a fresh breakdown is now happening on this chart. So Syndicate Bank can be sold short. And the same goes, I think, for Bank of India, which has been the weakest government bank so far. So I think all these three can be sold short at the current level.
Stock which is doing well, though, before I get to Yatin, a stock which is doing well is Oberoi Realty. Now, in the morning we highlighted this whole development, not that too many stocks might benefit immediately, but Oberoi Realty certainly seems to be in the thick of things, up 3.5% today as well. 526 or 527 currently. Any thoughts here, Hadrien? Oberoi Realty?
Oberoi Realty is definitely, in a very good structure, but I believe that Indiable real estate is in a much better state if you compare it with an Oberoi, because Indiable real estate has actually broken out from this flag pattern breakout 2 days back, and it is also sustaining above that breakout zone. If you see, the relative strength is actually indicating, it is crossing past the 60-65 zone, and even the other oscillators are indicating that the momentum is likely to, being carried forward. So I think Indiable opportunity is a fantastic opportunity for a short-term trader to latch onto, and one can play for a target of close to 260, 265 from here on.
Okay. Well, interesting. The new rules benefit players in the island city. Let's see if it does benefit Indiabulls or no. However, what is not doing well is Monnet Ispat. And while the JSW Steel Consortium is the only bidder for Monnet Ispat, and lenders deliberate over the 7,500 crore write-down that's said to have been proposed by the bidders, Yatin's done some numbers. There are some assumptions here, there are some calculations, so you need to monitor it carefully and take it with not just a pinch but a bucket of salt. But there are some reasonable estimates that are numbers that you need to keep in mind if you are a current shareholder of Monnet Ispat, because this is what the deal could mean for you. Yatin, thanks for joining in again. And once again, just lay out for the benefit of our viewers, what are the assumptions that we are making when we are doing this scenario analysis. This is not a done deal, it's merely a scenario analysis, I presume.
Yeah. We are doing a scenario analysis on Monnet Ispat. Of course, various assumptions, taken here. News reports are suggesting that banks may take a 75% haircut, which means that the 10,000 odd crore debt on which Monnet Ispat is sitting, that will be cut down to a level of 2,500 crores. And not only that, the partner who will be coming in and most probable JSW's consortium would be bagging Monnet Ispat in all probabilities. They will do a fresh equity infusion of 1,000 crores, and most probably that should come in at par value, simply to do with the fact that, since lenders are taking such a big hit, probably, the equity infusion or the current shareholders also need to take some hits, and probably that is the reason why the issue can happen at at par. And more importantly, there could be no open offer because there is a SEBI relaxation as far as the entire NCLT process is concerned. Now, quickly take you to the capacity, which is close to 1.5 million tons per annum. And if you were to take JSW's current brownfield expansion and the current market valuation for setting up a new steel plant, and if you assume a valuation of $465 a ton, that translates into an enterprise value of close to 4,550 crores for a company like Monnet Ispat, which means that if you deduct the debt portion from here, the derived activity value for Monnet Ispat could be close to 2,050 crores. Most importantly, one thing we need to remember with the next slide's points about is the current number of shares is close to 20 crores. We have rounded off for the calculation simplicity. The new shares, which I was telling you, the 1,000 crores will come in from the consortium partner, and total number of shares post the transaction, hopefully if this structure remains, the total equity shares could be close to 120 crores, which means that if you divide it by the equity value we got in the previous slide, the value of each share could be as low as 17 rupees per share, almost half of what it currently trades at. But let me also talk about what the market is currently factoring in. They are factoring in a probable, EBITDA of close to 1,000 crores based on current market prices. The next slide will, talk in detail about that. Give it a, EV EBITDA of close to 7 times, which is usually the valuation benchmark for smaller metal companies and steel companies. Then the price per share works out to be 37.5 rupee, which is quite close to the current market price. But of course, this 1,000 crore turnaround EBITDA that we are talking about will take many years, many quarters, and depends on the resolution plan and how successfully a player like JSW Steel is able to turn around the operations of Monnet Ispat. So in net, one thing that you need to understand in this entire transaction about Monnet Ispat is that the quantum of equity dilution will decide the fate for the minority shareholders, and also the kind of structuring the new partners bring in. So that is something, the key risks that the shareholders should understand for Monnet Ispat is the kind of dilution, as well as a premature merger with the target company is something that could affect the current minority shareholders of Monnet Ispat.
Thanks a lot for that, Yatin. Some calculations, some presumptions out there, keep in mind, but Monnet Ispat under a bit of pressure today. Nitasha, any thoughts on any of these distressed names which are likely to see bidding before we let you go? Are you looking down that barrel at all?
No, not really. We'd rather wait for more details to come out before we start speculating on it.
Okay, so before we thank you, Nitasha, then, last time around when you were with us, you gave us a fantastic idea, or gave our viewers a fantastic idea on Symphony. I'm not asking for your individual stock recommendation, but something that the house is bullish on currently.
So we still continue to remain quite bullish on the consumption space, and within the space, I think Future Consumer is one of the picks that we have. We've seen the company do a very good run up in the recent past, that largely because of all the things that are playing for it. One, it has been increasing its own brand. Second, it has increased its penetration within the future retail chain. Third, it has looked at more distribution channels to try and increase the penetration. And most importantly, fourth, they've raised capital to pay back debt. Rather, they got some capital a few years back, which they've been using to pay back debt, which has helped to improve the bottom line, as well as the higher proportion of the higher margin business has also helped in improving profitability. That is one of the top picks that we have as far as the consumption space is concerned, food space as such.
All right, Nitasha, we'll leave it at that note. Thanks a lot for joining us today and giving us your views on the markets and also on your topics.
Thank you.
Well, it's time for us to slip into a short break here on Countdown. But on the other side, we get you the Fab 4 stocks of the day. And at 3:15 p.m., we get you what dealing rooms are recommending and some closing strategies from our experts. Stay tuned.
Are we live?
Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
Just business news, we're news for business people.
Welcome back to Countdown right here on Bloomberg Quint. Let's begin the last half an hour of trade with firstly a quick check on the markets, which are doing precious little, so flat as flat can be for the Sensex and the Nifty. The Nifty Bank about 0.33% off in trade. But let's start off with Fab 4 and Yash Upadhyaya joins in to tell us what's making it to his list today. Good afternoon, Yash.
Good afternoon, Neeraj. So we start off with offshore companies, with Aban Offshore topping our Fab 4 list. The stock has gained close to 16% today, tracking the gains in crude oil prices. Brent crude crossed the $69 per barrel mark for the first time in 2.5 years, and we're seeing good gains coming from the likes of Aban Offshore, Dolphin Offshore, Duke Offshore, all of them. Welspun Industries is another name which is up in trade. The stock has surged close to 6% today after 4.7 crore shares, or about 5% of the overall equity, exchanged hands via multiple block deals. The buyers and sellers are not known as of now, but that would be an information that I'd be watching out for once it gets updating on the exchanges. Punj Lloyd is up as much as 5.5% today after we've seen that the ET report stating that the company has initiated arbitration against Libyan government oil, Sirte Oil, to recover dues amounting to some 1,300 crore rupees in relation to a contract which it had received back in 2006 for the laying down of gas pipes. And finally, Electrosteel Steels is going from strength to strength. The stock is locked in a 5% upper circuit for a fourth consecutive trading session after the company announced that it has received resolution plans from 4 companies, including the like of Tata Steel, Vedanta, Edelweiss ARC and Renaissance Steel. Back to you.
Thanks for that, Yash. But there are a lot more stocks in the broader markets which are moving in today's session. Let's just pull up Marksans Pharma. That's the one my producer is just prompted. It's up almost 3%, and the stock's been gaining, I guess, for the last 6 trading sessions, if I'm not mistaken. Yes, Marksans Pharma clients for the 6th straight day. It's trading with gains of 3%. A while back, we did a chart check on Container Corp. Pull up that stock. It's hit fresh highs in today's trade, and now it's trading with gains of almost 8%. I think we did a chart check with Hadrien. I'll take this time around to Kunal. Kunal, what sort of target would you be watching out on Container Corp? 1480 is the current level. If somebody is holding a long position, what sort of target price would you suggest them?
Well, given the momentum, I think the stock can very easily get to 1550. There is substantial room on the upside. We've seen a very clear breakout today. The volumes are very substantial, and I think even in the F&O segment, we've seen a very, very substantial jump in open interest for this one. So I think 1550 can also be on the cards, but I think the first target I think would be around 1535, 1540.
Okay. Let's also look at GMR Infra. That stock has surged by almost 3% in last few minutes of trade. You can see that on your screen now. Stock is up 5.5%, out of which almost 3% has come over last few minutes. Hadrien, if you look at this chart, is there an opportunity to get in now?
Yes, definitely. GMR Infra, if you see, has been consolidating since the February of 2015. It is an absolutely nothing in all these years, and finally, when there is a stock that is, is saying that we want to actually move higher. Doing a quick chart check, GMR Infra is a definite buy from these levels. The stock is actually broken out from a very beautiful cup and handle pattern on the weekly charts that happened 2 weeks back. And we're seeing that the stock sustaining above those breakout zones. I think GMR Infra is all set to move towards the 30 mark. That is the next potential target for GMR Infra.
Okay, so that's the call coming in on GMR Infra. Vinit Bolinjkar, head of equities research at Ventura Securities, is joining us now. Vinit, GMR, GVK, NCC, all these stocks have been buzzing off late. What's your pick?
Are you talking to me?
Yes.
Okay, so we like Deccan Cement. Deccan Cement is one of the cheapest stocks in the cement space, $46 EV per ton. And I believe that top line will grow at 25% over the next 3 years. And CAGR of EBITDA is going to be almost 32%. And so is going to be the PAT. Sorry, CAGR will be of the EBITDA would be around 26%, and PAT is expected to grow at 32% over the next 3 years. So, given this, I think
for a while, he has recommended this stock on our channel earlier as well in different programs.
Deccan Cement, is it?
Deccan Cement. By the way, Sadbhav, Infra is the other infra name which has moved up by 3.5%. That's just a swing over last few minutes. For the day, stock is up by 5.5%. Something is definitely happening with all these infra names, Nilesh.
Well, that's interesting. A bunch of these construction names doing well. Let's wait and watch what happens to these stocks. Any thoughts here in terms of a trade? Kunal, Saraogi?
What stocks were you discussing?
The infrastructure names, Kunal. A clutch of these construction companies have just started moving up in the last few minutes of trade.
See, I'm very bullish on IRB, although the stock hasn't done much today and it actually has come off the day's high. But if you look at the structure, I'm quite impressed with the structure that IRB has got. And we've seen a big volume build-up also around it. So as long as the stock stays above 245, there is a very high chance that the stock might make a dash towards 260, 265. So I'm bullish on IRB. I think can be bought at the current levels with a stop loss just shy of 245.
A clutch of others have also gone up, right? That Pradeep marked. Now, I don't know what's got to do with this. I don't know if there's some further clarity that's emerged because if I'm not wrong, this news of FDI in construction is probably restricted to only realty broking. And there, I think the only one in the listed space that I can think of would be InfoEdge because of their construction real estate broking website that they have. Otherwise, the Knight Franks, JLLs or any of the others aren't really listed, and neither is Magic Bricks listed. So InfoEdge is probably the only one where I can understand that is merit here. But the other construction names, don't quite know as to what could be the reason, but all of them are up and about. There's no block deal either. I mean, what I'm trying to say in the case of Som Distillery, there's a block deal, so which is why it went up. I don't think there are some big block deals in any of the other construction names.
So no serious money coming in.
Maybe there is, but at least confess ignorance to the fundamental reason because this FDI and construction isn't exactly for the construction companies per se.
And the move has come now. Well, the news came at least 2 hours back, right? So.
Yeah, I don't know if the clarification, if any kind of clarification is coming, because until now we don't know if the construction companies were eligible or no. Our understanding was that it was restricted to the realty broking companies. I don't know if that has changed and some realization about maybe some other rules have come in or no. But the stocks are definitely active.
And guess what? The IT pack, TCS is now up 4%.
Wow.
The numbers are tomorrow, and 5 out of top 10 Nifty gainers are actually your IT stocks. So call it TCS, Wipro, HCL are the top 3 gainers. Besides that, you've also got stocks like Tech, Mahindra, Infosys, which are all right now trading in the green. Hadrien, TCS numbers come out post-market hours tomorrow. Would you have any strategy for our viewers if they want to take a bet ahead of the numbers?
Yeah, the strategy should definitely be long, and the overall setup is actually indicating that, the stock is looking pretty strong on the daily charts as well as the weekly charts. Secondly, it is also very clearly broken out today from its previous peak of 2,777, and it is also maintaining above the same. So given the current momentum, I think long should be the strategy, but I really don't know once the results are announced how things are going to pan out, because it seems to be factoring in a lot of positive the positive results in the price. So I think we may see some profit booking or even a small sell-off post the results. But I don't think so that will going to change the course of the overall view on TCS. The trader can book profits tomorrow, but should be long with a longer term perspective.
So TCS is definitely giving a breakout on the long-term charts. But before we go to Navneet and check out some of the FNO names, let's see what is happening with Alchem Lab. That stock has moved up by 4 to 5%, but the facility has received the EIR, and that is probably the reason why the stock has moved up. As you can see, 7%, more than 7% now, with good volumes on Alchem. We'll probably get more update on Alchem. But before that, let's see which are the stocks on Navneet's radar.
Well, one stock which could enter into the FNO ban, and sorry to the producer, I'm just skipping out one stock because I've just checked. It doesn't look like Dewan Housing will enter into the FNO ban, so sorry for that. Reliance Power is the one. Watch out for this. Yesterday I did highlight the stock that it could enter. So it's just at the borderline, 94% overall open interest in the futures and options market compared to the market-wide position limit. Remember, that has to breach the 95% mark, and definitely there has been huge amount of addition that has been seen on the futures, January futures of Reliance Power, as well as a couple of the options strike. But what may come out of the FNO ban, and that's Jindal Steel and Power. Just want to tell you that the stock is also trading at day's high now, JSPL. It's seen substantial gains, and yesterday's overall open interest was 80.3 as a percentage of MWPL. For a stock to come out, it has to breach that mark. Obviously, you wouldn't see any open interest addition since it is in the FNO ban, but look at that chart. It's almost at day's high, 5% higher right now on JSPL, trading around the level of 261. I guess there was one more upgrade from one of the brokerages which came about for JSPL today.
Yes, indeed, there was an update on JSPL coming in today, and that could also be the other driver. Although we have been receiving one report or the other on steel space of late, so this is one space where people are really bullish. JSPL, Hadrien, any views on this stock?
Yeah, actually, instead of JSPL, I'm more bullish on Tata Steel. The stock is actually consolidating, doing not much in the past 2 days, and I think for a short-term trader, ideally this is a very good opportunity to get into the stock. So Tata Steel, I'm pretty bullish on. Can play for a target of 780, 785, and a stop loss should be close to the 760 mark on the downside.
Okay, so that's the view coming in here. Let's see what are the other stocks that continue to move up. Coffee Day is one that is still strong. But what is with all these stocks that benefit from rising crude prices? So you have Aban Offshore, Dolphin Offshore, Jindal Drilling, Alpha Geo. All these stocks have gained in today's trade with good volumes. If you look at it, Kunal, if you have seen any of these charts, is there any opportunity to trade?
Well, I think some of them definitely merit a look. In particular, I think Dolphin Offshore looks very impressive on the chart. We've seen some very substantial volume build-up. Plus the stock has cleared this resistance around 140. So I think it's definitely headed towards 158, 160 levels. So there's more room on the upside, and one can actually look to buy Dolphin Offshore at the current levels.
Okay. What else? There is strength in Alchem, of course, has moved up. Sterlite Technologies is up about 7.5%, 362. These would be fresh life highs for Sterlite Tech, so good going there. And lo behold, GVK Power is up another 5% in trade. This one moves up. It's if you look at the last maybe 4 months or 6 months, you will see a series of circuit ups, then a clutch of moves down, again in a step-like fashion, and now again starting to move up. There you see that it doesn't quite show the move down from 18.5 to about 14, and then again a move up back to 22. But it's just had a fabulous last year or so, or maybe 2 years. It went down to as low as 6 rupees, currently at 23. It's been a 4-bagger from those levels as GVK Power, without any of the other debt issues getting resolved. It's just more a case of confidence returning on the airport vertical maybe, but GVK Power has just been on the platform, another planet, up about, and the volume's pretty decent too. 23 rupees stock, so not a very large stock, but volume's pretty decent too. And if I remember correctly, Pradeep was marking GMR as well today. I think that too has moved up. So the GMR GVK duo is back, at least winning ways in today's session. Don't know how long this will last, but for today's session, it's up and about both of them. In fact, the volumes on GMR, 57 million, and that's not average even for a 22 rupee stock. It's just fairly large volumes on GMR Infra as well. So both of them doing rather well for themselves. Any trades here? I don't think you can trade GVK, or maybe actually even GMR is locked on the circuit. So both of them up about 5%, so I don't think there is too much of a trade here.
I think Hadrien gave a call on GMR, or was that... we did get a call on GMR today on technicals. Interestingly, by the way, Nifty is back in green. Oh, that was only just for a second or a fraction of a second. It's back again. Sensex is also in green. So some recovery we have seen in index. Let's see if that lasts really.
Yeah, let's wait and watch. Okay, it's 3:15, that time of the show when we tell you what dealing rooms are recommending in the session today. Yatin Mota and Darshan Mehta are here with their channel checks. Good afternoon, both of you. Darshan, let's start off with you first.
Yeah, so one of the stocks that's been spoken about today is the Container Corp. It's up almost 7 to 8% last time I checked. There is significant amount of domestic mutual fund accumulation that is happening on the counter. So this is one of the counters that's been actively spoken about in trade today. Camlin Fine, again, you know, a couple of dealing rooms have indicated they believe that the selling overhang of the promoters is now over. One of the promoters who was actively selling is totally out of the company via the blocks that happened, and they believe that there could be more traction coming ahead for Camlin Fine. And the last stock that dealers are talking about is GE Shipping. Significant amount of HNI accumulation is seen on the counter. It's moved up on heavy volumes in trade today. But Yatin, what are you hearing?
Well, a couple of stocks and a few on the trading side. Wipro, and if you look at the IT pack in general, there is a lot of FI buying which is happening in. So Wipro dealers are recommending buying, and probably there is a trading upside given the fact that the fund flows are strong. On the contrary, we have some PSU banking names which are quite weak in trade. So Bank of India, that is one stock wherein dealers are recommending a STBT kind of a strategy, which is sell today, buy tomorrow. Probably some more downside is what they're expecting as far as the PSU pack is concerned. And finally, in the cash market segment, watch out for Welspun Enterprises. That is one stock wherein HNIs are expecting a 10 to 15% short-term upside. Of course, we have been talking about this, but a lot of fresh buying is what we can see in trade today. Almost 23 lakh shares traded in this stock. So a lot of price and volume action happening as far as Welspun group of companies is concerned.
That's interesting. Thanks a lot, both of you, for giving us those updates. Do watch out for those names. I presume that there is some hike in freight on coal and coke. And if true, this would mean a negative for steel, more importantly cement companies. And I think from what Nikki is telling us, north-based cement companies, which have a larger dependence on rail freight for their coal requirements, would be the ones which could take a larger portion of the hit. So do watch out for Shree Cement, JK Cement, JK Lakshmi Cement. They're already dealing with the pet coke issues. Despite that, of course, the momentum continues in these companies. And now maybe, just maybe, some more hike. I confess ignorance about the quantum of the hike and therefore the resultant impact on margins. No, not Ramco really, just the north-based companies. So JK Lakshmi, JK and Shree Cement amongst the principal ones. Some plants of JP may be out there, maybe a Heidelberg or otherwise, but those are the companies that might stand to get impacted majorly. Not to say that the other cement companies won't, but these are the ones, the north-based ones, which would be the ones which would be principally impacted in the session today. I mean, I wish we had Vinit Bolinjkar. We could have asked him a question or two on these as well. Nevertheless, we'll try and patch that line too. But one more blow, so to say, small one at that maybe, for the cement companies.
But look at Elkem Lab. That stock was up almost 11% at one point of time. You know, now is up only 3.5%. So it's given up all its gain. So like what our research team also suggested, that probably news is not that significant for this company. There was no such issue with the facility, and therefore this is more of a routine update coming in. But you know, as usual, market always reacts to such reports. There was some buying interest, speculative buying interest rather, and now profit booking at the same pace.
Yeah, well, let's get in closing strategies before we move any further. And one top stock from both our experts. Kunal, to you first. If you were to bet on one stock, a closing strategy, which one would that be?
Well, I think it will be Wipro. I think I've already mentioned a buy on Wipro, but I think the stock is really running away. I think it can get to 338, 340 levels very quickly. So Wipro can be picked up at the current levels now with a revised stop loss around 318.
Okay, so buy call on Wipro from Kunal Saraogi. Wow, up 3.5%. What about you, Hadrien? Your top call?
Yeah, I'll go with another IT name, that is HCL Tech. You know, the breakout is already there. The momentum is, you know, being carried forward. The overall IT pack is looking good, and I think HCL Tech is also all set to move towards the 930, 935 mark. So HCL Tech is a good buy even at these levels, and you can keep a stop loss of close to 908.
Okay, let's just pull up the intraday chart of Voltas. I think that's seen a bit of correction in the past half an hour or so. The intraday chart will tell you the correct picture. It's down almost 3%, currently trading at a day's low. Kunal, on the charts at 629, will it be wise enough to take a fresh shot at these levels, considering the stock is trading at day's low?
Well, I would rather wait and watch, just because there is a support coming up for the stock at around 625. It's trading at 632. So because there's support right below where it's trading, I think one should wait and watch.
Okay, so that's the call coming in. Interestingly, both our experts are bullish on IT, and look at NIIT Limited, though it's into IT education space. That stock has moved up quite a bit in last few minutes of trade. And also we were talking about infra space. Sadbhav Engineering and Sadbhav Infra are two more stocks that I have spotted in last minutes of trade. These two have also moved up quite a bit. Sadbhav Engineering, you can see, is up 5.5% now, and Infra is also up by almost 5% in today's trade. These construction infrastructure names that we have seen moving up. Hadrien, if you have looked at both these, Sadbhav group of companies, any call here?
Yeah, definitely. Sadbhav Engineering, in fact, has broken out from this very good consolidation phase in the previous week. And I think today's move is actually justifying that the momentum is here to stay. The stock had done absolutely nothing since the March of 2015 till we saw this breakout happening in late November's or early December's. So since then we've seen very good momentum in Sadbhav Engineering, and I think Sadbhav Engineering is a stock not to miss out on if a trader has a 3 to 6 months perspective, because I believe that the current breakout will help Sadbhav Engineering to move higher towards even the 500, 525 mark. That's where I see the short-term target for Sadbhav Engineering.
Okay, some stocks, I think Hindustan Copper, we're talking about gainers all through this while, some losers as well. I think Hindustan Copper should come up on your screen. Has had a few pain points in the last few days. I think majority of the sessions in the last 8 or 9, Hindustan Copper has come off. So that's it's not a very pretty looking chart for Hindustan Copper. Even on the large cap end, this is what Hindustan Copper has done the last 5 sessions.
Interesting.
Sorry?
interesting commodity stock that one can trade. You know, if you're tracking commodity market and want to trade a base metal stock, I think Hindustan Copper is one such name that gives
reason being
beautiful swings both ways.
Okay.
That's the only reason. I mean, trading maybe a Vedanta is relatively difficult, but on Hindustan Copper you always get such consistent moves both ways. But
okay, that's interesting. So that's Hindustan Copper, of course, coming off. That's well, the various averages for this one. Anyways, we'll maybe talk about this a bit later on as well. But I don't know if Pradeep can make out too much out of this. But those three RSIs
still holding on, maybe close to the recent, the near-term support
levels. Okay. What's also come off on the last few days is Eicher Motors. I think, if I'm not wrong, was trading around the 28,000 mark. In today's session too, has come off quite rapidly, but now down to about 28,000 from the 30,000 mark that Eicher Motor used to be. So from the large cap pocket, that is looking slightly wobbly. And while we on the topic of stocks which are losing out today, I think Page Industries falls within that bucket, down a whole 5%. It's been a while that I've seen Page do this, but that stock is down about 5.5%, 5%, okay, but 22,924. So that's seen quite a bit of a dip. Voltas has seen quite a bit of a dip as well, and Sudarshan Chemicals is down about 2.5%. The 2 or 3 active names which are down in the session today. Any thoughts on Page Industries, Hadrien?
Yeah, Page Industries, has been seeing some profit booking in the recent past, but I'd like to come on an Eicher Motor, Neeraj, because if you check the weekly chart, is doing something very interesting. If you see, since the December 2016 lows, Eicher Motors has not broken below its 51 exponential moving average on the weekly basis. This is the first week since then Eicher Motors is showing signs of a breach. Although we'll have to wait for a Friday close to see whether this breach is confirmed or not, but things are looking a bit wobbly for Eicher Motors because it is also broken down from its long-term 200-day moving average. So all these parameters are actually indicating that weakness is here to stay. The daily charts also has a head and shoulder pattern breakdown that we have seen in today's session. The neckline was close to 28,500. So I think Eicher Motors, is a weak candidate from here on, can fall further.
Well, from the metals pack pull-up JSPL, we did highlight the stock may come out of the F&O ban for tomorrow's trade, but look at the move the stock has had just in the last half an hour of trade. We were also telling you that one more brokerage had upgraded the counter, that's Citi. They've increased the target price to almost 375 from the earlier target of 220. But let's get a chart check going on this. Kunal, at 265, what should one do with JSPL, a counter which has rallied a lot in the last few trading sessions? Should they be booking profits or still hold on?
Well, I would say that holding on is the best course of action. I think the stock continues to be in the stellar uptrend, and I see more room on the upside. I think there's a perfect possibility that you might see 300 happening for the stock. So one should continue to have long positions, and I think continue to revise stop loss as it goes in your favor. 255 is where one should put a stop loss right now and continue to hold long positions on JSPL.
Okay. That's the call coming in here. Symphony, interestingly, if you look at, is up 7% now. We did talk about this stock and it's holding on, or rather building on the gains. Punj Lloyd is another stock that was in news today and has gained almost 6%. Kunal, if you have had a look at Punj Lloyd's chart, any calls here?
Well, Punj Lloyd, of course, has broken out on the charts, and I think looks like it's headed towards 33 levels, which is the next major resistance for this one. But one should be very, very leery of actually buying into the stock at these current levels. I would give it a pass given its past history. We've seen several such breakouts that have not worked out for the stock. So I'd wait and watch, and I'd rather look at other things which are breaking out on the charts.
Okay. So Punj Lloyd is not really giving you an opportunity right now. So hold on before you act on this move. Well, let's see how markets are closing today. Significant recovery though. Navneet, how does the closing look like?
Well, flat to negative, Pradeep. And as you rightly mentioned, there was a recovery seen from the lower levels. So Nifty is going to close for the third straight session above the mark of 10,600. So once again, that's a positive sign. The consolidation continues once again. Sensex above the mark of 25,700, but it's not been able to do so. Let's also look at the broader markets. Well, you know, there's some bit of profit booking which is coming at higher levels, so but no major cuts has been seen from broader markets. The Nifty mid-cap free float index closing with cuts of 0.1%, almost a flat to negative closing for the Nifty small cap index. Even for the BSE small cap index, that's closing with cuts of almost 16 points. Let's look at Sensex constituents then and see which were the stocks which dragged the index lower. But let me start off with actually Dr. Reddy. Let me start off with the laggards first. Dr. Reddy's, Tata Motors, DBR, NTPC, Asian Paints, all these stocks fell in today's session. But your heavyweights from the likes of HDFC, L&T, ITC, mind you, all these stocks have closed in the red, and precisely that's the reason that that capped the moves for this index on the upside. But in terms of gainers, the list should be dominated by the IT stocks. So TCS, Wipro right on top with between 2 to 3% gains. Adani Port, Coal India were also up and about, and Infosys up almost 1%. The company comes out with its earnings on Friday. Indocin, ONGC and Tata Steel were a couple of gainers today, Pradeep.
Yeah, so just like index stocks, you know, the overall market breadth also remains negative. So let's look at some of the key losers. Shalby is the first one that should come on your screen. The company reported first quarterly numbers after listing, and the stock ended the day almost at day's low. Subros was another key loser after smart up move, so there was some bit of profit booking. Page Industries was also a significant loser in today's trade, down by almost 1,300 rupees, closing at the day's low. Venky's was yet another trader's favorite, high beta name that lost in today's trade, and also Muthoot Finance, where one of our experts has just given a sell call as well, and I think over last 1 hour or so this stock has lost further. A few gainers. Well, before that, let's talk about Alchem Lab, which did figure among top gainers for a while, was up 11% after the news of clearance for one of the plants came in. But after that, we saw significant profit booking. Almost 2/3 or 3/4 of gains were given up by the time we are approaching the close. What is also significant segment, so to say, is tin plate, Tata Sponge and Tata Metallic. Some of these Tata Group metal companies that moved up today with significantly high volumes. Coffee Day Enterprises was another key gainer, but topping this chart is definitely Som Distilleries. After a few block deals, the stock finally closing the day at 20% circuit. In fact, was locked there for last hour or hour and a half of trade today.
Well, Pradeep, what saved the market today, I would call it, were the IT gainers, especially for the Nifty constituents. This is the Nifty intraday chart, just about closing flattish. We did have a gap up opening, but Nifty gave up its gains, and finally we closed the day in the red. The Nifty IT index closing with gains of over 2%, one of the sole sectoral gainers for the day. I want to pull up the contributors chart, if we can just pull that up, because had it not been for the IT constituents, your heavyweights like TCS, Infosys, HCL, Wipro, look at this. I think we would have ended with deeper cuts today. TCS contributed nearly 12 points, Infi 5, HCL almost 3 points. What capped the moves on the upside were your heavyweights once again. So HDFC, State Bank of India ended the day in the red. IT stocks, I was talking about them. So these are the constituents of the Nifty IT index, top 3 gainers. TCS closing at 52-week high ahead of its numbers tomorrow. Tata Elxsi has been gaining a lot from the mid-cap IT pack. And the other one is Wipro. That saw a sharp jump in today's session. This is the market breadth for today. We closed in the red actually, so it was in favor of the declines as the chart is telling you. However, the opening was in favor of the advances, but towards the end this gap widened and there was more selling pressure which was seen at the top, and we've been mentioning that because the markets are trading around the all-time high level, so there is some bit of profit booking which is coming at the top. And I just want to pull up the India volatility index. That's been a concern for this market. We've been mentioning ahead of the budget. You will see the movement here. It's closed above the mark of 14, I guess, for the first time in the last 5 to 6 trading session. And finally, let's also check how the participation panned out today. We've been tracking very closely the cash turnover, which is moved above the average turnover that we usually see between 30 to 32,000 for NSE. So once again, for the third straight session, I would call it, the turnover was on the higher side for both BSE and NSE, and the NSE turnover was just about average, so around about 6 lakh crore of turnover when it came to the futures and options market of National Stock Exchange. Let's get some closing thoughts going from our experts. Hadrien, how would you be approaching the markets tomorrow? Nifty continues to consolidate, I guess, for the second or the third straight session. Would it be a stock-specific approach, or would you still trade on the index?
No, I rather prefer staying more stock specific because it is the third consecutive day, as you said, we are consolidating, and I think this consolidation phase will extend a bit further throughout the week, and before the next leg of rally begins. So it's very necessary the index actually consolidates and tries to digest the moves that we've seen in the recent past. So I think stock specific would be more fruitful, and Tata Elxsi is something that I'm pretty bullish on, and I think even at these levels one can consider buying Tata Elxsi, and in a medium term target I am seeing close to 1215 levels with a 1 month perspective.
Kunal, any call on Nifty Bank, because that is the one which is not really supporting markets on the way up?
Absolutely, Pradeep. I think I would completely agree that the biggest trouble area is Bank Nifty. We've not seen a breakout on that index as yet, and which is uncharacteristic of a bull market, because typically what happens is that whenever markets tend to go up, we see Bank Nifty outperforming the index, but this time it hasn't happened. And till the time Bank Nifty does not get past 25,800 and starts to move towards 26,000, you won't see a meaningful upside on the index also. So I think one should wait and watch and wait for a breakout above 25,800 on the Bank Nifty to go long on the index full throttle.
Okay, so wait and watch approach for Bank Nifty. Hadrien as well as Kunal, appreciate both of you joining us today and taking us through your technical calls on the market. Well, with that, it's a wrap on this edition of Countdown. Thanks a lot for watching the show, but don't go anywhere. Coming up next is the Mutual Fund Show.